This is Pat Ennis of Ennis Legacy Partners. Welcome to the Exit Readiness Podcast. Our mission here on the podcast is to provide you, the business owner, with subject matter expertise on topics pertaining to building transferable or sellable business value, and then for planning your eventual exit from the business. We want to help you build a business that's transferable and then help you exit successfully. The three-legged stool in exit planning represents three equally important pillars, if you will, that business owners really should address for a successful transition. Pillar number one on the stool would be business readiness. Is the business ready to be transferred or sold at maximum value? Would someone want to buy it? Personal readiness, and then financial readiness. And focusing on only one or two of these legs to the stool can lead to an unstable plan, with owners often regretting later their exit due to neglect of personal goals, perhaps, or lack of financial preparedness after leaving the business. While a more balanced approach, attending to each one of those legs of the stool, can ensure a valuable and transferable business, sufficient financial resources, and a meaningful post-exit life. This morning, we're going to speak to an aspect of the financial readiness leg of the stool that's often overlooked, and it's protecting personal assets with the right property, casualty, and liability portfolio of insurance coverage. We've had other episodes with attorneys where we've talked about protecting assets with legal tools, LLCs and trust and other things like that. This morning, we're going to be specific and focusing on protecting assets with the right insurance coverage portfolio. Common blind spots in this area involve valuation of assets, potential liability, lifestyle complexity, specialized assets, and so there can often be a need for a bespoke, customized, coordinated insurance program that requires a next level of planning expertise, if you will. And so that's the topic for this morning, protecting personal assets with the right insurance coverage. And our guest is Bryan Aguirre. Bryan's been a friend of mine for years. I've known him professionally and personally for decades. He's a partner. Bryan's a partner at Capital Insurance Partners here in Washington, D.C. He's a risk advisor specializing in personal and commercial lines of insurance. He helps business owners evaluate and identify any risk exposure from a business perspective, and then designs the appropriate coverage solutions for the businesses. But he actually specializes in providing risk management coverage and advice for individuals and families. And that is actually what we're going to focus on this morning, today, in this podcast episode, is protecting personal assets. Bryan's been in the insurance industry for 15 years now, and 7 years as a partner at Capital Insurance Partners. And so, Bryan, welcome to the podcast.
Thank you, Pat. Yeah, I'm excited to be here. Kind of talk about this aspect of insurance. It's oftentimes neglected, so excited to jump in here and just review this here with you all.
Yeah. So with this topic of protecting assets, personal assets with insurance coverage, what are some common issues or overlooked areas of risk, however you want to put it, that you run into often in evaluating a business owner, their personal asset structure, and their current risk management package, if you will? What are some of the common things that you see?
Yeah, so when we jump in with a client review, as we talk through, what's important, what are, I'm going to break it down, starting with a broader perspective here, just on insurance, what our goals are, and then we'll jump into kind of this asset protection via the umbrella policy. But many people show up and they're underinsured. They're with products that are not the right fit for them. They're focused on the wrong things with insurance, mainly because we're conditioned to think when we see commercials on the television and hear about, hey, what's important for insurance? It's where are my discounts and how can I save money? And I think your listeners, that is, we all want good value, but is not necessarily the top the top level of importance. Their importance is when the rubber meets the road and there's a serious event, we're transferring risk for those large events, not for petty events, things that we can self-insure. But our goal here is to, when there's a large event that from a property or liability perspective, when there's a loss, that their policy is going to apply, right? That their coverage is going to kick in, they're going to be made whole. And so that's oftentimes what we find is people are focused on the wrong things. How can I save money instead of, is my policy structured the right way? Where are the gaps? What are the coverage highlights? So just from a starting recommendation, and what I see the common issues are is just a shift in understanding what are we trying to accomplish here. And so a lot of what we're trying to do is adjust deductibles, right? Increase deductibles so that you're self-insuring, specifically on your home policy and in your auto policy, you're self-insuring more and you're using this for catastrophes or large events. So that's typically, what I try to help people shift in thinking from the beginning. Let's refocus on what our goals are here.
Yeah. So, hey, Brian, let me
Yeah.
interject a question just to follow up on something you said right at the outset. Areas where they're uninsured. What are some of those areas when you bring on a new client and you're doing the evaluation, the assessment, the analysis? What are some common areas that you see in regard to personal asset protection that are, often uninsured?
Yeah, and it's the largest issue that we see is, and this transitions to our topic at hand, which is the personal umbrella, right? Um, I guess we can quickly talk about some of the other aspects that are uninsured or underinsured, but we'll transition here to the umbrella discussion. But you know, usually what I see is the carrier that they're with, right? It's usually a national brand, and the agent has left off significant coverages that when claim time occurs and they realize on their policy water is not going to apply in a certain capacity of, they max out in 5 to 10 grand in coverage, when if they have a water event in their basement, they're looking at $100,000 in loss. They would probably want to know that, right? That's a significant event. So you see stuff like that, or you see exclusions of certain perils, you see exclusions of certain levels of coverage, whether it's their service lines, water coverage. Those are the common issues that we see specifically on their home policy.
Okay, so this would just be the typical home policy, home casualty, property and casualty liability policy that we all have. Everyone who owns real estate has this, and so that's what you're
Yeah,
speaking to, right?
yeah, that's typically where we see big gaps and significant coverage issues. But this leads to the honestly the biggest exposure that we see, which is your personal umbrella policy. And you'd be shocked how many people who have significant net worths don't even have an umbrella, have state minimums in auto liability, and have no idea because they've been operating with a carrier that's focused on, let's just get you the cheapest policy we can, right? Which is not our goal, right? So the umbrella is really the biggest gap, right? That's where a level of conviction. Again, we're getting back to the goal. We're transferring risk for large events, right? So in that category, I kind of spell it out. Your biggest risk is the auto exposure, and then there's any other frivolous or random lawsuit that we could be dragged into. So the auto is the biggest exposure. But if you have a pool, if you have other rental properties, if you look at the auto, you plow into somebody with your car and they have significant injuries, they're going to start with the auto policy. Their attorneys are going to chase your assets, right? And they're going to look at, what does this individual have to go after? And they're going to look at every personal asset that they have. And so That is really what we want to address here. And the
So,
goal is,
okay, so a couple questions. So the umbrella policy is going to pick up where the homeowner's policy and the car insurance policy leave off, right? Okay, so, but the umbrella policy certainly has like has limits as well.
correct. Yep. So you have to have the adequate limits on your underlying policies, right? The auto and the home, they can't just have the state minimums. You have to adjust those to have the minimum limits required for that umbrella to actually apply. So once those are addressed, those limits are exhausted, and that's when the umbrella kicks in, right? And sort of back to what you were asking, that number can be exhausted as well. So they go in $1 million increments. So I see plenty of people who have $1 million umbrella and they're like, I have no idea. I just was told to get an umbrella. So I have a million in coverage. Well, what is that? Again, what are we trying to cover here? It's that net worth, right? And so the calculus for where your umbrella should be is based on a couple things. Um, and I'm kind of spelling out the worst case scenario here, but that's what we do is we'll just say, hey, here's what you should be protecting: real estate, cash, investments, anything titled in your name personally. Um, and by law, the states in this, the DMV, they can garnish 25% of wages for 10 years. So I kind of put that back on my clients to say, look, you're going to know that number better than I do, but that's what we need to accomplish. How are we going to, what is the number that we need to see to protect that personal net worth?
Okay, so is it basically if someone's worth 10 million, should they have a $10 million umbrella policy?
Generally speaking, yes, that's what they should have. So if they got a $10 million umbrella, that's going to protect all of their assets. Now,
Okay, now what would keep an attorney though? Well, nothing would keep an attorney from doing what I'm about to ask you, I'm
yeah,
sure.
yeah.
But if an attorney with their client decide they know somehow they know that someone has an umbrella policy for 10 million,
Hmm.
and because they have a net worth of 10 million, the attorney's going to go for 20 million, right?
They may try, right? I mean, that's where we have this litigation aspect where I've talked to many attorneys and they say, well, you know, they're basically going to find out what that umbrella's at, and they know they're generally not going to get more than that. But if they have serious earning potential, I mean that is a fact, right? They can garnish wages. It's 25% for 10 years is really the statute. So I know a lot of people approach me for legal advice, and I'm a lot cheaper than an attorney. I joke around I'm a part-time attorney, but it's just I would say, in my training and what we've studied in all the attorneys that we've talked to, your goal is to cover the net worth. That's how we point our clients and we say this is. But like you're mentioning, they can sue for anything, right? They can try, but these settlements often end up being around what their earning, is a calculus more around their net worth and their earning potential. Now, there are a few things that are excluded from that number, so this will drop this significantly, but you don't have to use retirement accounts as part of that calculation until they're accessible to you. So that doesn't need to be part of the calculus. And any business assets do not need to be included in that. So they can't come after the business when it's a personal lawsuit. That's where you're going to have your commercial policies and your personal policies, but they cannot come after the business assets.
Well, unless those business assets aren't protected.
Correct.
I mean, if it's a sole proprietor, for example,
Yeah,
it's
that's true.
possible. So, okay. So our clientele, as you know,
Hmm.
business owners, most and almost all of them, high net worth individuals
Hmm.
to begin with, and then they may become even higher net worth individuals once they transfer or sell their businesses. And oftentimes they have outside of the business, they have assets. They have various assets, real estate for the most part.
Yep.
but maybe other things. What are some? Are there things that you bump into? Because I know this is uh, uh, most of the business that you do is with high net worth folks.
Hmm.
Uh, what do you run into that's unique to high net worth folks that you don't with the mass affluent?
Yeah, it's really the complexities, like you said, that they have a team of experts that are generally trying to help navigate these things, and the more hands at the table, the more complexities, the more challenges, and it really is just crossing your T's and dotting your I's to make sure that everything is accounted for on that umbrella. Because what happens is, like you said, let's say they have a portfolio of all personal rentals, 10 properties, 20 properties, whatever that is. They have a yacht. They have, three other second homes in LA, New York. And again, we're talking about, somebody who has some serious um, net worth. But if the umbrella is not reflecting all of the exposures, right? That they have all of their vehicles, all of their properties. If it doesn't reflect everything, there can be a gap. And so that's really the key, is making sure everything is accounted for and that all those underlying limits are, they have an underlying policy, the limits are met, and that really everything is tied closely under the umbrella. So it's really just the complexities that we see when there's, you know, uh, other properties that are owned by multiple people, or next thing you know, they're subleasing to a business that's doing another very high risk activity on their property, right? How do you navigate that, right? How do you make sure that that umbrella is still going to apply if they're, let's say they own a farm and they're having a big concert venue randomly at that property? Well, that's a huge exposure, right? So um, it's those are the things that, as they have multiple risks, multiple assets, how do you make sure that they have the conviction that you can't just loosely, let anything happen at these properties and at these assets, and anybody use, so that's obviously then where you tie in your lawyers to make sure that, okay, how are we going to protect this individual? So
Yeah, well, that's a good point because each one of the real estate properties in a portfolio might have a different use. And so the coverage specific to that property needs to be customized, if you will, and then it has to be coordinated then with the umbrella policy, right? Okay. All right. So here's another question. What is there ever a situation where there's more than one umbrella policy? I mean, let's take an extreme example. Let's take let's take Elon Musk and his personal assets, whatever, crazy. Uh, if he has an umbrella policy, is it just going to be one policy that's just covers everything, or is
there may be multiple layers, right? And you know, if I'm being honest, the uber net worth or the extreme high net worth, I don't have multiple hundreds of millions or billions of dollar clients, but there may be, often what happens is there's layering of policies when we're talking about protecting. Hey, we need to account for this exposure, so we need a very unique umbrella that your underlying carrier that generally covers auto, home, umbrella, multiple rentals, your boat, they might write everything except for two or three of their high value, high risk, you know, um, their high risk issues. So that's where you might have to approach a more unique company that will say, okay, we're going to cover this, and the umbrella will say, okay, as long as somebody else is covering it, we're gonna our coverage would apply. But oftentimes that won't be the case, which is, if we're not covering the underlying risk, we're not interested in having the umbrella apply over top. So that's where, yes, you may have a second umbrella that will have to kick in. So you need to get creative in the layering of those policies. There can be multiple umbrellas.
okay? So how can our listeners know if they've got, because this kind of insurance planning, I would imagine it sounds like it takes a level of sophistication in regard to the agent involved, um, to coordinate all of these specialized assets and everything. Is it, I mean, that makes sense, right? That's true. Okay. How can a listener know if their agent is at that level, um, commensurate with that client's portfolio of assets and being able to bring to bear the knowledge and the expertise that's necessary to really make sure that all this stuff's coordinated the way it needs to be?
Yeah, it's a couple things. Generally, there's different types of agents. You have independent agents, which is what we are. We're independent. We represent multiple carriers. We pride ourselves on being risk advisors. There's captive agents. Those are your State Farms of the world. They're married to one company, and then your online, 1-800 carriers. Generally, the agents that are operating in our space, the risk advisor space, are independent, and that I can say that with confidence. That's generally where you're going to know you have an independent agent, and they're keying in on a lot of what we just discussed, which is asset protection, evaluation of coverage, and that they're going to the market to make sure they have the appropriate policies. So if your agent is focusing on some of the things that we hey, we're saving you money here, we're they're focused on the wrong things, you generally know, okay, maybe I need a second evaluation here. So that those are probably the key factors that I would look for. Um, and your comfort level, how thorough were they? Did they go through everything, explain, some of the things we just talked about? And if not, a lot of people just don't have that comfort level. They know they have insurance, they just don't know how it applies. And so,
Yeah, it's one of these things. It's kind of like with me with cars. I take my car to the shop. I'm at the mercy. I don't know. I don't know what to ask. I don't even know the questions. Um, and I think that's true probably with most people with this uh, area of asset protection, is we really don't know what questions to ask. So, speak to that.
yeah, it should be, and this is really where I try to start with education, right? And there's plenty of people that I've worked with that are very busy, and they're like, Bryan, I've been told to speak with you. I trust you. Tell me the key points and let's keep this moving, right? Versus some people want to know everything, right? They just want to know, okay, I want to go through a real thorough process to start. At least at that point, I'll know. So, the kind of twofold to your question, it should be education driven. It should be focused on the coverages, not so much like, hey, here's the policy that saves you some money. It should be education driven and coverage driven. Those are your key things, and that should be the focus, right? So, hey, these are the things that are important for my clients and that I know are going to be important to you, but you also tell me what else are we missing here that keeps you up at night. And I think those are the things that will bring level of peace of mind, which is what a lot of us are just we want peace of mind to know when the big event happens, how am I going to apply and what gaps do I have, right? So I think those are the key points to look for and how to address that.
Okay, fantastic. As we wrap up here, two more questions. How often should a client review with you or their agent their their insurance portfolio? Yeah, this is another thing where I think because we typically don't understand it, and if we have Bryan who we trust, um, we may just, yeah, I got an umbrella policy. Yeah, I'm good, Bryan. But even so, should they plan to review this um,
Yeah,
periodically with you?
yeah, good question. Any major life changes, you know, additions, additional assets, changes in net worth? Yes, right. That's where you want to bring up, um, major improvements to a property, major, you know, where there may need a builder's risk policy. But yes, any major material changes where, hey, this is going to impact my insurance portfolio. I think I think some people are like you said, they get busy and they say, okay, I felt very good about the initial process. I'm going to let this be, and unless I got a major issue. Um, but yeah, we usually touch base every few years, every other year, um, and the client should reach out as well. So I would say just be proactive if you're uncertain about something. But there are plenty of people I've talked to. Hey, I've been with the same carrier for 20 years. I've never gone through a remarket, right? And that's where a lot of people are like, should we do a remarket? I wouldn't say every year, maybe not every other year, unless something materially changes with the premiums. But every few years, keep that company honest, right? That's where you want the honesty. Should we be remarketing these policies? Is my carrier still the right fit? And that's where we try to go back to the drawing board every few years. Yeah.
Okay, should the client expect you, the insurance professional, to be interacting with anyone else on their advisor team, such as their estate planning attorney, their wealth manager, their CPA? Should they expect that? And then if it's not happening, is that a yellow flag or anything?
Yeah. I mean, I definitely expect that. As I said, your attorneys, as far as protection and how to structure things. You and I have discussed, hey, should these properties be in an LLC for additional protection, right? And that's where it may make sense to restructure some properties. But also from a financial planning perspective, I oftentimes point people back to, let's talk to your financial planner. Let's make sure that this number for your umbrella is in the right spot. Um, so yes, it's definitely a team effort.
Okay, great. So thank you for this time. Fantastic. I think it's going to be proved to be very helpful to listeners. If you were going to give a couple, three steps, uh, recommendations to those listening, let's a listener is thinking, okay, yeah, all this makes sense. What should I do next? What would you tell them to do next?
Yeah, I would say if you're kind of what you were asking before, if you don't have that comfort level, you don't feel like your agent has you're maybe with the wrong product or your coverage is inadequate, reach out to your network to find somebody that can help with this review. And find that risk advisor, right? Not an insurance person. I call them order taker insurance agents. You want a risk advisor who's going to do a proper evaluation. So I would say look for that wherever you're at. I operate mainly in the DMV, Maryland, D.C., and Virginia. We have a few other states as well, but find somebody local to you that you can trust, has the right products in your area, um, and go through that comprehensive review. And as we talked about, make sure that umbrella um, is reviewed and you have the proper limit and that you have one. So I would say those are the important steps. Is you know and a lot of people, they say, hey, I know I need to do this, and it's number
It
72 on their list of things to do, but
is.
yeah.
Sorry, Brian, but it is.
Yeah, I totally get that, and that's where there has to be some level of conviction to put some time and effort to do this, because it's a big deal, right? I mean, that's what we're doing, is we're making sure if something big happens that we're protected. And so I would say at some point, find a window, spend some time there. It's usually not we're not talking about hours. We're usually talking about some basic data gathering and then a review with that risk advisor. So spend the time.
Okay, so if a listener wants to contact you, how can they do that? And then two, is there anything that you'd like to promote today?
Yeah, appreciate it, Pat. You can reach out directly through our website. I can also provide contact information that you can send out to your listeners, but they can reach out, email, cell. Happy to give any advice or do a review for them at any point. So, no promotions other than just take your insurance seriously. Really, and I think that's been communicated already. But I do so appreciate the time, and glad we could have this discussion.
Sure, absolutely. No, it's been great. Well, do you want to provide either a phone number or an email
Sure.
address?
Yeah. My email is tongue twister, but it's B Aguirre, so Aguirre at capital with an AL, INS like insurance partners with an S.com. My cell is 301-704-3117.
Okay, thank you. Thanks, Brian. Really appreciate it. Listeners, if you want help maximizing the value of your business or planning for your eventual exit, you can reach us at Ennis Legacy Partners through our website, nslp.com or exitreadiness.com. Thank you for listening. If you've benefited from today's episode, please consider liking it and then sharing it on social media and subscribing to the podcast. Until next time on the Exit Readiness Podcast, this is Pat Ennis signing off.